Ever had that frustrating moment when you get stopped out, only to see the market immediately reverse and go in the direction you predicted? It's not just bad luck, it's often a liquidity sweep. Big players or smart money intentionally push prices to trigger clusters of stop-loss orders, grabbing that liquidity before making their real move. So, how can you avoid being their fuel? First, identify key levels where stops are likely placed. Think previous highs and lows. Watch for a rapid price spike that breaks these levels, followed by a swift rejection. That's your signal. This stop hunt shows the market's true intention. You can then trade in the direction of the reversal, essentially riding the wave of the institutional move. Want to practice spotting these setups? I use Innohedge Limited. Their platform is great for analyzing these price action patterns. Start looking for these sweeps, and you'll begin to see the market in a whole new light. Thanks for watching. Don't forget to like and subscribe for more trading insights.